Hello and welcome to the macro of it for the week beginning the 25th of September 2017. Be very open, this week there is almost nothing happening in the Australian economic landscape, and so for that reason I actually want to concentrate on what this week is. It's the end of the quarter, and that is actually something to sort of look at. And let's actually look across the quarter and where we've been in what's been a pretty good start to the financial year 2018. Have a look at employment. Employment at the moment in 2017 is on track for its best year since 2005, and Q3 particularly, July, August and September numbers for employment are incredibly strong. And if you look on a trend basis, they are clearly ramping up. So that's where you probably want to start. Second part, have a look at net exports. Trade balances for those 3 months as well have been really positive, and that's leading into the idea that Q3 could have a really nice solid bounce. After Q2, the results that we saw for GDP there was all around government spending. There's a belief that Q3 could actually see a really nice movement on the private investment side, and net exports really helping GDP move to the upside as well. Rates are the other side of this. There's been a lot of discussion in the third quarter around rates and where rates will be in 2018. A lot of retail banks and also investment banks moved to the idea the RBA is going to raise rates in 2018. There's certainly one to be aware of, but what also came out this month is that inflation is still very flat, and September showed that Q2 inflation is pretty flat, and therefore you should probably expect to see the same thing happening going on in Q3, and inflation just isn't getting towards their 2 to 3% trim mean basis to really start thinking about rates. So that was the conundrum there. The other part that has continued to come out, we actually saw the wage index that came out for the second quarter. Now wages in Q3 might be a bit stronger, but Q2 wages showed that they're just not materializing. In fact, they're actually growing at the lowest level they have in 20 years, and that is likely to filter through into Q3. The question will be whether or not Q4 can actually pick up. What does that mean for Q4? What does it mean also for moving forward? I think if you put that all as a whole, Q3 should be fairly positive. It normally is. Cyclically, Q3 tends to be quite a good month. The Chinese are a reason for that. We get really good exports going out in Q3. But there is a sign that Q3 has started to show that materialization of forecasts around employment, forecasts around growth, forecasts around business confidence and business expansion is clearly materializing. What hasn't materialized yet is consumption and consumer confidence. We locked in another 10th consecutive month in September. Will that therefore filter through into Q4? And that's probably what we want to see. Can the consumer finally buy into the idea that the economy here is actually quite strong and is actually moving in the right direction? And that again, we'll see things around employment, things around wage growth being, again, a really huge point to look at economically for Q4. So good quarter Q3, and one that you need to really sort of watch in their Q3 releases. But can the data that's come out this month materialize into the next quarter as well and see us driving forward into 2018?
Did you know that your membership gives you access to our analyst Q&A section? Every week, our Intelligent Investor analyst team answer members' questions on investing in ASX-listed companies. If you would like an analyst's opinion on your investment queries, go to the Q&A section of any of our websites to read or ask a question.